Nigeria's central bank has announced limits on exactly how much banks can hold in foreign currency. Now, this directive comes after the central bank expressed concern about the growth of foreign exposure on the balance sheets of commercial banks. The naira has continued to tumble against the American dollar, and that's affected dollar-denominated sovereign bonds, which have suffered sharp falls in turn. The central bank now requires lenders' net open positions to be 20% of shareholders' funds for short positions and a zero limit for long positions. The regulator says that excess net open dollar positions on banks' balance sheets have created an incentive for lenders to essentially hold on to foreign currency, and that's exposing them to FX risks, among others. The central bank says that lenders will be required to have liquid foreign assets to cover maturing foreign currency obligations. All right, then, so let's dig a little deeper into what exactly is happening in Nigeria's FX market. Tunji Andrews is an economist and the CEO of Awaba, a financial services firm. Is joining us now live from Lagos. Thank you very much for your time this evening, sir. So let's start with something slightly related. Foreign airlines, they say over $700 million of their cash is still trapped in the country. It's been a few months of adjustment, really, since the second half of last year. Can you walk us through why that adjustment in the naira hasn't allowed the central bank to clear that backlog of dollar demand?
So there are a few things. The first, you have to look at it from two perspectives. There's the fact of FX availability in Nigeria for them to be able to convert their holding naira, which is what they sold those airline tickets into US dollars, which is what they can transfer it out of Nigeria in. And then there's the other conversation of being able to actually remove it from Nigeria. The fact that the naira has slipped a bit, and the fact that there is more liquidity in the market doesn't directly mean that every single thing that the airlines have, every single amount that the airlines have actually requested for has been actually met. There was a small response from the airlines that all their demands in terms of what they are requesting in terms of dollars have not actually been met. And I think that's the reason why we're still having a bit of a gap.
Indeed. From your perspective, given what you see in the market at the moment, can you give us a sense of what the dollar supply situation is like at the moment? Are we seeing portfolio investors coming back in response to some of the adjustments that we've seen in the naira, or is there still a general wait-and-see attitude?
I think it's still a wait-and-see attitude. And the general thinking around it is the only source of major FX we see in Nigeria right now comes from the central bank via the NNPC. Which is, of course, crude oil sales in Nigeria. We still do not have that FPI flows into Nigeria at this particular time, despite the fact that we are seeing a huge jump in stock prices in Nigeria, which is what usually FPI inflows come in for. But right now, what we're still seeing is a lot of crude oil sales coming from the NNPC via the CBNs and no other sources. So it's let's see if other people would jump in and then we start to go in ourselves.
Indeed, and we'll get to the stock market a little later on. But I wonder, I'd like to get your take rather, on how we should read the foreign currency data that the central bank is putting out. So, for example, they will say that they had roughly $32.6 billion in liquid reserves on the 29th of January. But given all the forward positions that they've essentially been accumulating over a certain period of time, is this actually $32 billion that's available, or is the actual number of available reserves much, much lower than that?
So, I mean, just understanding the way reserves work, some of those funds have been accounted for in forwards. Some of those funds have been accounted for in trade conversations. Some of those volumes have been accounted for in all sorts of discussions having to do with the federal government. So I do not, I mean, nobody should look at it specifically as the fact that we have 32 billion or whatever it is in the FX reserves as the actual cash that we have in the FX reserve unencumbered. So we might have that cash, but some of it has been accounted for in one or two things.
All right. I want to get back to the naira pricing question and dollar inflows, which you discussed just a moment ago, because we've seen the dollar naira rate, at least in the NAFEX window, that's rapidly closing the gap, right, to the parallel market, down to, I think, 1482.57 at one point on Tuesday. But other than the oil and gas sectors, Is there anywhere else that the government can actually look at and say, okay, we can actually start to get some significant dollar inflows from this?
Not at the moment, not immediately. Long term, yes, but right now, nothing major. Trickles here and there, but nothing major.
Since the start of the year, to go back to something you mentioned earlier, the stock market, the NSE All Share has rallied really hard, right? It's extended this rally from the second half of 2024, gone as high as, I think, 104,600 points. Is this rally essentially a response to, shall we say, an inflation hedge? Because we've sort of seen that playing out in years past in Zimbabwe with the stock market there. Is it the same thing that's happening with the Nigerian stocks?
No. To be honest with you, there's a lot of positive sentiment with the Nigerian Stock Exchange at this particular time, the NGX, as you want to call it. There's a lot of positive sentiment coming in from results of companies in Nigeria, and also a lot of feel-good stories that are coming out about focused areas some of these businesses are targeting at this particular time. So I mean, it's almost like it's everywhere you look at that there's a good story being told about the NGX at this particular time. So it's really a lot of local investment that is pretty much going around and causing a lot of attention about the the NGX. I keep saying Nigerian Stock Exchange, but it's a case of some people are still very skeptical about the jump. They believe that without foreign portfolio investments, we can't really test if this is something that is long-term and structural, rather than it just being, everybody feeling a bit high on adrenaline.
Indeed, because from the outside looking in, inflation is relatively high. It's at levels that we haven't seen in decades. There's still a lot of uncertainty about the direction of the naira. We're concerned about the strength of consumer demand in the Nigerian market. Growth this year is forecasted around 3%, which is relatively anemic, strictly speaking. So, from outside looking in, the question would be just how fundamental, how strong, how durable, really, can that rally be?
To be honest with you, a few of us still continue to look at the market with a bit of skepticism. It feels too good to be true, especially because of, what the market went through last year. A few companies delisted off the market, and there was a conversation about liquidity in the market. It did not feel like the market was something that was going to really give that pump. But towards the end of 2023, around Q4 into this year, the rally has been unprecedented, and it's actually been very shocking. A few of us still continue to look at it with skepticism, but the numbers are there. They do not lie. But we need to be able to see if it is a real jump, or it's something that is going to come down in another month or two.
Indeed. Let's see if this rally certainly has legs in it. Tunji Andrews, thank you very much for your time this evening. We appreciate it.